So today let's talk a little bit about India's startup ecosystem. In the last 14 years, India has evolved as one of the startup powerhouses of the world. We have overshadowed most of the European countries and have become second or third most successful startup nations. But if you analyze this whole thing very carefully, you would realize that everything is not a merry-go-round. I think the startup ecosystem in India is more troubled than anywhere else. And I want to discuss this a little bit because this is been brewing for a long time. So let's start from past a little bit. The first startup which I was aware of was 197. Now 197 is the one company which holds Paytm. After that came FLipkart. And these two companies back in the days used to provide their services with available channels. For example, 197 used to provide you ability to recharge your phone or book tickets using USSD. Similarly, Flipkart was providing Amazon-like services in India where you could order books and those books used to get delivered to you. Slowly and steadily, these companies grew and a lot of companies around their ecosystem also grew, which were either taken over by these companies or they lost business because it was not possible for them to operate in that ecosystem, which required huge amount of cash. Now, these companies now grew as India became more and more digitized. For example, as the cost of data went down and people started getting access to mobile phones and data, Flipkart started expanding. It became full-fledged e-commerce company. And I would say that for a long time, they were the lone champions, or you can say lone tiger in India's e-commerce ecosystem. Same goes with Paytm. Paytm built up this reputation of a wallet provider which enabled easy transaction between merchants and even users. And those were the times when India didn't had a real-time payment trail as it has now. Let's do a little bit of a fast forward from then on. From then on, Flipkart went on to be bought by Walmart, and then Paytm went public recently, I think last year, and they went public with a whopping market capitalization of almost $20 billion or so, and $18 or $19 billion. I think it was 1 lakh plus crores in total market capitalization, and they listed for 1400 plus. The same happened with another company recently called Zomato. Now this is the golden side of the story. Now let's talk a little bit about the real challenge here. You see, the entire ecosystem, the entire startup ecosystem in India is built upon the concept of copying others. Look at Flipkart, it was complete ripoff of Amazon in the West. Look at Oyo Rooms, a copy of Airbnb. Ola, a copy of Uber. Zomato, a copy of Uber Eats, and so on and so forth. Now, if you see the pattern, you would realize that 90% of these companies which have formed, other than Paytm, and we'll come back to Paytm very quickly, other than Paytm have actually copied something or the other from the West. And they have been surviving on these for a very long time until these companies chose to enter India. Now, there is a fundamental difference between companies like Flipkart and Amazon. You see, while Amazon was built on continuous innovation, Flipkart was built on continuous photocopying. So when Amazon entered the Indian ecosystem, they built up their own supply chain, they built up their own fulfillment services. They started expanding themselves to even remote nook and corners of India, which created a tremendous amount of capital pressure on Flipkart. And ultimately that led to their demise. Now you will be a little bit surprised as to why do I call it demise? Well, the reason why I call this as a demise of Flipkart is because it was sold to Walmart to enable them to enter into the Indian market. When this happens, where you are basically selling yourself off to enable quote unquote your competitor to enter the Indian market, for me, that's not a success. That's kind of failure. I told you I will come back to Paytm, so let's talk about them a little bit. While Paytm had a fantastic idea and they started to innovate, they got lost into this pursuit of market capitalization or valuation because they were one of the very unique payment techs in India. They were kind of enabling this P2P kind of a payment mechanism in India. A lot of these foreign companies decided to invest into them. When they started getting money, they started purchasing customers rather than giving them value, so they come to them organically. Now what that led them to was believing that they could continue to grow by offering customers steep discounts on stuff, or by offering customers these unnecessary and completely stupid reward programs which continuously increase their cost of customer acquisition. Now, not only this, what it also did, it basically destroyed the India's customer base, which means all what these customers or the normal retail consumers started looking for was a discount, which meant that they were never loyal to one of the brands. Now, how long can you continue that? Well, so long you have free access to liquidity and easy access to cash. As soon as your cash dries up, you start losing value. And the example is in front of us. Flipkart got sold to Walmart. Paytm lost more than 70,000 crore in market capitalization, and I think they wiped off almost 60-70% of total value which they had at the time of listing. On the other hand, the most important company which I want to really talk about is Zomato. You see, when Zomato got listed, I started kicking myself because I thought, damn it, I missed out an opportunity to invest into one of the most innovative companies in India, because little did I know that this company is going to fall flat on its face. When they listed last year, they listed at a price of, I think, 141 at an issued price of 75. While I believe that this is highly inflated because their price to sales ratio was very high, like 30 point something or 28 point something. But I thought, you never know, this company might have innovated something. They might have built up very unique value proposition for their customers. And that could be in the way of building efficient supply chain and efficient distribution network and stuff like that. But little did I know that the company had nothing behind the scene. The only thing which they had was their ability to spend a ton of investor money to increase their sales, quote unquote revenue, and then on top of that, just build up an app. So the only thing which they have is an app, right? Which is not a technology asset. Fast forward, recently, they ended up losing 88,000 crores in market valuation. That's unbelievable. So the company, which got listed at a whopping valuation of 1,33,000 crores, has actually lost almost 80 or 70% of their overall value. So they are currently trading at somewhere around 40,000 crores. The point here is that almost all the money which has been lost is by the retail investors. The institutional clients just sold off and went away with huge amount of profits, and normal investors like you and me ended up holding the bag. This baffles me because across the board, if you look, the people who are losing money are retail investors, and these companies come into the retail market, they float a huge amount of shares, and people think that these are quote unquote tech companies and invest money, and then they start losing money because they're burning cash like anything. And then the people who lose money is you and me. Ultimately, what is wrong with these Indian startups? The first and foremost thing which is wrong is that they do not innovate. Every startup, take any company out there in India, they have zero technology IP. What do I mean by technology IP? See, first of all, we should stop calling these companies as tech companies because none of them are tech companies. You cannot just call a company as a tech company because they have built up a website or an app and they are distributing their goods through an app. You should be called a technology company when you are really building something, when you are really creating an IP, which is creating a unique value for your customers. These companies are nothing but sales companies, which are aggregating certain services and digitizing them. And when I say digitizing them, not in a very unique way as to like what Alibaba does, but in just an established way which has zero barrier to entry. For example, if you have money, you and I can go ahead and start a company like this and very quickly build up a $1 billion valuation if we onboard, like say 20 million customers, which is quite easy in India if you offer them freebies. None of these companies are tech companies. For me, tech companies are Alibaba, DJI, Huawei, and I'm comparing only with China because China is actually a technology startup ecosystem which actually creates IP. So none of them are tech companies. The biggest problem is that none of them invest in research and create something which could be called as their IP. Number two is entire valuation. Entire mechanism to value these companies is flawed. Just because you're selling or just because you are making, say, 20 million deliveries every month or you have 5 million customers means nothing if the price to sales ratios are very high where you're investing a huge amount of money or burning cash like crazy to get customers. The most important thing which needs to be done is to fix this method of valuation which these startups have, because within a couple of years, companies become a $1 billion company simply because India has huge population and it's highly digitized and it is actually giving access to these remote areas to these companies to go and fetch out customers. I think the third thing which is wrong, which needs to be fixed, is inexperienced founders. So in the last 4-5 months, we have seen two very famous faces who were quote unquote sharks. One of them was shark. Fall from grace. Ashneer Grover from BharatPe and Ankiti Bose of Zelingo. They both found out to be, and in fact, either they both or some of their family members were found to be misappropriating funds of their own startups. It's like, having your kids go out there and make a ton of money and then you're lying to them and taking their money and just cheating them. This shows how much of immaturity still exists there. See, remember, because you are the founder and you're getting this millions and millions of dollars of free liquidity pumped into the ecosystem, you, come what may, will become rich. But the money which you're making it at the expense of a whole bunch of employees who you are hiring, none of them become rich. How many times have you seen the employees of these companies become really, really rich? Of course, these guys who are running these crazy ideas which have no sustainability or resilience, they all become rich and then they appear on these celebrity TV shows trying to teach you how to do business. So all in all, I don't want to get into that discussion, but all in all, what I want to say is that it's very important that Indian ecosystem of startups is fixed. The only companies which are innovating in India are still those legacy companies. Look at Reliance. Look at what they're doing with Jio. They have not only created a homegrown infrastructure for 5G internet connectivity, but they are investing heavily into changing the content creation market, digitization and interconnection of legacy technologies with the newer emerging technologies such as 5G. Look at what Tata is doing in automobile sector. Look at what Mahindra is doing. Look at what government of India is doing. I mean, I would have expected a startup to build what NPCI is today. What I want to say is that you can only be called a tech company if you're really building something which is unique. Number two, you need to have some experience when you are running, and you need to have that ethical integrity in you that this company which you are building, you will be okay giving it all with what you have up until this company really becomes a profitable endeavor for all your shareholders and your employees. There's a lesson or two which you can learn from Mark Zuckerberg and others. They have formed these companies. In fact, learn something from Elon Musk. They have formed these companies and they were ready to give every single bit of what they had until they build these companies into large, powerful enterprises which are driving change across the board. So lastly, before concluding this video, I would like to say that it's great that India is growing and the startup ecosystem is growing and there are more founders who want to come in and become entrepreneurs. But it's also important that there is some kind of a mentorship there. There is some kind of a push for innovation there. Otherwise, there would be these big balloony unicorns which are full of gas inflated with air and they only need a small little pinprick to explode. Don't take it otherwise. And let me know in the comments what you think, if you think I'm completely crazy and I'm saying something wrong. But I also feel for all the shareholders who are losing these billions of dollars because of the mismanaged incompetence of such founders who are forming these companies. Until the next video, stay safe, stay healthy, and see you again. Bye-bye.